Our next guest has over a decade of experience within the Forex and Blockchain industry. His company, B2Broker, is a liquidity and technology provider of B2B solutions for the crypto and FX industry. Can I please call upon stage Mr. Azizov, the CEO of B2Broker.
Okay, let me introduce our company, just a couple of minutes. So B2Broker, we have been working on the market since 2014. It's already almost 8 years. I was one of the founder of the company. Of course, I have also my co-founder guys. And right now, we run several projects, and we can divide these projects by several categories. And the first category is our technology business. We are technology provider, and what basically we do, we have 270 people, and I think 50% of them, it's our IT guys, besides of the technical support. So it's pure developers, project managers, product managers, Q&A, DevOps, front-end, testers. So actually the full core team, product managers, project managers, business analysts, system analysts, and we develop different products. We provide them based on a SaaS business model. So basically you pay for the subscription, and based on those products you can build or you can launch your own business. So for example, our B2 Core, it's one of the well-developed back office and CRM solution for the brokers and cryptocurrency exchanges. And you can run different business models such as wallets, crypto brokerage, Forex brokerage, multi-asset brokers, securities broker, crypto exchange. So right now it's already more than 130 brokers around the world. So they are using our B2 Core solution. Also, we do have copy trading system, B2 Trader as a matching trading platform along with the advanced user interface. So it's all comprehensive solutions, and if you decide to launch your either crypto broker or crypto exchange or any kind of business model you have in mind, so basically you can choose one of our product, or you can combine them from the several components. The second category of our business, it's our liquidity business, and we have licenses in several jurisdictions, and our B2 Prime project, it's a liquidity provider. So right now, in terms of crypto, besides, because like our focus was initially, it's the Forex and OTC liquidity, but since beginning of 2017, we entered crypto space, and since that time, we started developing our crypto liquidity. And now, around 200 Forex and crypto brokers, they are using our crypto CFD liquidity. We have in our liquidity pool 125 trading pairs, and those pairs, of course, there are a lot of major pairs and minor pairs, but the thing is that we can provide you leverage up to 10% margin, which is like 1 up to 10, let's say, and you can use in one single stream more than 1,000 different trading pairs divided by 7 categories, divided by 7 asset classes. So it's crypto, crypto spot, crypto perpetual, Forex indices, metals, and so on. Okay, B2BX is our cryptocurrency exchange based in Estonia. It's exchange focusing on only corporate clients. So if you have a corporate entity and you would like to deal with crypto, so welcome on board. We serve only corporate clients because we don't serve retail clients, unfortunately. All our business processes designed exclusively for the corporate entities. Next, our direction, it's a payment business. We have digital banking solution based in UK, in London. We have authorized electronic money institutional FCA license in London, and we run, let's say, fiat processing business. But at the same time, we have B2B in Pay. It's very well-known project. Around, I don't know, maybe 400 merchants, they are using our system. Actually, if you want to start accepting cryptocurrency payments and you want to get paid in fiat, so you don't want even to touch the crypto, B2B Pay is for you. And also B2B Pay has the second type of product. We call it Enterprise Blockchain Wallet. Basically what you can do there, you can you don't need to do integration with all the blockchains and tokens on those blockchains, so you can connect, you can plug in just one single unified API and you will get access to all blockchains. So every merchant, every client has dedicated gateways for the dedicated nodes, and you can create wallets, you can accept, receive, store, hold. So there are several also features in terms of security. You can use those wallets as a hot or warm, or even you can create another wallet which will be dedicated especially for the cold storage. But we don't hold custody license, we have only virtual asset license, and this is why we kind of force clients to store their crypto on the custody solution and to use our wallets only as a hot and warm wallet. So the both companies, B2Broker and B2B Pay, are here, and after my speech you will be able to speak to our guys. So also we do have B2Broker Venture Capital Fund, and it's our VC direction, and we invest into the interesting startups. So today we are going to talk about DeFi and DeFi business models. Consider that this topic is your introduction into the DeFi world. I'm not going to dive into very detail because I will give you the brief overview about DeFi itself. So as you can see here, right now over 75 billions already locked into DeFi economy. 75 billions, guys. I remember the date we entered the DeFi sector in the beginning of 2020, and right after that and it was very young market. Even few people they could actually understand what does it mean DeFi, what is that, because DeFi also, it's a hype word like DeFi, but in reality there are so many business models, different let's say non-reliable projects and so on, so this is why you have to figure out by yourself what you would like to find there in order to optimize or make your strategy more efficient. And as you can see, the peak was over the 115 billions, and then since the interest rate started going down, that's why we see a bit correction in terms of capitalization. But it's just correction. I think then more protocols will be coming in, and then more stable and reliable they become, then we will see the next wave. So DeFi Pulse Index indicates around top 10 DeFi coins, and that's why you see the correction, because now it's since the peak we are around 40% correction. Okay, next statistics, it's DeFi tokens by market cap, and Terra, somebody was mentioning before me here about Terra. Yes, it's a very interesting protocol, but it's algorithmic, and we'll touch base this point later. And these top coins, they are now hot on the markets, and as you can see, the revenue since July 2020 till now, which the users already received as a reward, already exceeded $4 billion. And we don't count here the revenue or profit that you generated or gained from the coins. For example, you bought one of the DeFi coin and this coin went up, so you fix the profit, you withdraw your USDT. No, we didn't count this, so we counted only interest rate which was generated as a yield farming. So, core idea of DeFi. I don't think that here you need like a lot of explanation, but just few words. Core idea is DeFi is about trustless. So if the two parties they don't trust each other, here in DeFi they don't need to do that as well. So you can find the protocols and projects where you will explore the idea or algorithm behind the smart contract of this protocol, and you don't need to trust somebody, you don't need to deal with someone, you don't need to speak or make an agreement about something. So everything you can read by protocol, and you can rely on this protocol. Of course, there are also a lot of exploits and other some potential issues, let's put it this way. But still, at least if you diversify your portfolio properly, then of course you may lose 10% here, 5% here, but you will not lose 100% at one time, and at the same time you don't need to worry about that your account might be blocked or some counterparty will disappear. So this is the core idea of DeFi. That's why, and also one more thing, since the regulation became much more stronger, and if you take a look back a bit, 3-4 years ago, everybody was screaming only about decentralization, freedom, and so on. Now all the corporate investors, all the big fund managers, all the just users with the sufficient funds, so they would like to deal with the regulated and centralized exchanges. Nevertheless, that this is centralized, pretty traditional financial world, like very similar to. So this is why, since that time, for the last 3-4 years, a lot of things have been changed, and I think it's still going towards to this direction about regulation. But nevertheless, that regulation is here, and I don't believe, because I hear sometimes that like traditional finance will disappear. No, of course not, because all the big institutions and even the wealth people, they would like to deal with the traditional regulated institution. That's why I don't believe that traditional market will disappear. I believe that both market will be developed, and every single company will have their business model based on the traditional relationship, they find traditional finance, and they will have a project based on the DeFi approach. So, and first of the, let's say, major and the most popular business model based on DeFi, it's lending. So everybody knows about lending now, and if you remember when these lending platforms, they were launched on the market, and it was so hot topic, and everybody was discussed that basically you can lend your USDT, your wrap Bitcoin, and you can just sit back and relax, and you will be generating your interest rate. Of course, these times already have passed, and now we see the reality, but still the idea of the lending is very beautiful, and it's still growing up market, but just the interest rate, it's much less than it was or used to be from the beginning. So idea of the lending is that, for example, you have your Bitcoin. You need to convert this Bitcoin into the wrap Bitcoin, because blockchain of Bitcoin doesn't support smart contracts. So this is why you have to buy wrap Bitcoin. It's also opened the question about wrap Bitcoin. It's kind of risk as well, but still you can buy this wrap Bitcoin and then you can lend your wrap Bitcoin on the platform. Why you should do so? For example, you don't want to sell your Bitcoin because you believe that Bitcoin will hit 100K. So this is why you don't want to sell your Bitcoin, but at the same time you want to try different business model because you have a choice. You can either just sit and hold your Bitcoin, or you can generate some revenue on your Bitcoin and make additional extra interest. You can gain extra interest rate on this Bitcoin, or you can just take this USDT and invest into the other project. So this is why the lending, it's a pretty popular business model. There are two types of users. It's a lender and borrower. So the borrower is the person who borrowed the money or borrowed some assets on the platform. The lender is the person or user who lend the money on the platform and generate interest rate from the borrower. The borrower is paying. Let's speak about real numbers. I took as an example Ava. Ava is one of the famous and largest lending platform, and as you can see here, the borrow APY, let's say for USD coin. USD coin, just to remind you, it's a centralized, regulated, stable coin based on decentralized blockchains. So keep this in mind that it's centralized stable coin, but still it's very well used into the crypto economy because it's a stable coin based on different blockchains such as Binance Smart Chain, Ethereum, Tron, and so on. So, and here you can see that borrow APY average percentage yield is around 3%. Deposit APY, so when you want to deposit, you will generate 1.98%. So these numbers, they are super dynamic. They are changing constantly, every second, every minute. So this is why everything what I'm saying here is just the real numbers, but based on the yesterday. So this is why I take this into consideration, that this is our preliminary numbers. So, and what you can potentially do, you can lend your USD coin and you can generate 1.98%. It's still higher. If you compare to existing bank interest rate, what is the existing interest rate for the US dollar? As far as I remember, 0.1% around, right? So 0.1%. So this is why now it's it became very common practice on the DeFi market that even the traditional finance already started investing into the DeFi. This is why we saw these 75 billions already locked into the crypto, DeFi economy, because this 1.98%, it's already much higher comparing to the interest rate that potentially you can generate from the bank. Of course, here there is some risk, right? That platform might be hard, and Ava, they were hard, but as far as I remember, they compensated everything what they lost at that time of the hub. So this is why you can say that there are some certain risk, but you also should diversify your risk by spreading your portfolio among several lending platforms. And the carry trade on DeFi market is pretty simple. When, for example, on the traditional finance, you can take or find some or borrow some funds for, 1%, and you can put here for the 1.98. So, and you will generate without risk. Yeah, of course there is some risk, but very little, and you will generate around 1% just net revenue. Or what you can do potentially, you have your BTC, you can lend your BTC, you can generate from BTC, but it's okay, it's a very small amount, but still you will generate some extra funds. And at the same time, what you can do, you can take USDT or USD coin, you can borrow for this 3%, and then you can buy for this USDC, you can buy some tokens which potentially may go up, and then you will sell it there, then you will pay this 3% and you will get back your USDT. So it's there are some certain different approaches how to deal with that, but just keep in mind that lending is still pretty popular, and it's a very good instrument how to diversify your portfolio. Okay, next business model, it's a decentralized exchange. So here always, as always, there are three parties. It's a user trader, it's a liquidity provider, and it's a platform. So, and all three parties are making their interest rate or generating their profits by using different approaches and business models. First of all, the decentralized exchange, it's good when you want to deal, for example, with some non-liquid coins, because you know, a lot of new coins, they cannot get listing on the normal proper exchange, or of course they can get listing on a small exchanges, but there are no users, and it doesn't make sense to be listed there. You know, of course you can do this wash trading there, so you can agree with the exchange that they will remove the commission for you, you can generate some volume, but if there are no users, it doesn't make sense. So this is why DeFi is a good as a beginning for the all new coins, and that's why it's a pretty popular sector for them. Also, of course, decentralized exchange, it's for the users who don't want to trust to centralized exchange, or who are afraid that their account might be blocked on the exchange. There are some examples right on the market that on the centralized exchanges account might be blocked, and many people sometimes face such challenges. So that's why you don't need to trust to centralized counterparty. And also one of the good business model, it's arbitrage that you can run a month across different decentralized exchanges, because all these liquidity pools depends on the several factors, and you can enable, or you can develop your bot which will be monitoring different like liquidity pools across all decentralized exchanges, and we'll be finding all the discrepancies in the prices, and that's how you can also generate some revenue. But of course, I should admit that with the very comprehensive and strong liquidity pools, the arbitrage opportunity is almost gone, but it still exists, but it's almost gone. And of course, you can still run arbitrage on a less liquid pairs. Let's put it this way. There are still certain opportunities to run your arbitrage deals. So, and the core mechanic of DEX, it's automated market making. That's why you don't need to trust to centralized counterparty, but at the same time there are some weaknesses, and if you decide to become a liquidity provider and you want to create your liquidity pool, what so your steps should be followed. For example, let's say today is $2,500, it's one Ethereum. So if you want to create your liquidity pool, you put 10 Ethereum along with 25,000 USDT. So, and now equivalent of one Ether, one ETH, it's $2,500. So then, let's say another liquidity provider came into your liquidity pool and decided to inject also one ETH and 2,500 USDT. And you end up with 11 ETH and 27,500 USDT. Equivalent is still the same, 2,500. And then a trader from another side, he placed the order and he decided to buy out 1 USDT. What he will be doing, he will place the order, and don't forget that this is the formula. Again, there are some exchanges, they change time to time this formula, but the core idea is still the same. So X multiplied by Y, it's Z. And here, when you have equivalent $2,500, when the trader wants to withdraw this one ETH, so he just impact by this trade, let's say 10% of this on this liquidity pool, which is pretty sufficient for this small liquidity pool. And the price already becomes 3,000, like even more, $3,025. So you see, it's a very huge slippage when you deal with the small liquidity pools. So this is why you have to also, when you deal with decentralized exchanges, you have to find every time the very strong liquidity pool where you will not get the such huge slippage. That's why, you know, it's always two ways. You can either launch your own liquidity pool, because some exchanges, they allow new users to launch their liquidity pools, but at the same time, the users will not be willing to deal with your liquidity pool unless this liquidity pool is really strong. So that's why you can generate, of course you can just trade, you pay commission to DEX, this commission divides, goes like, let's say, major of this part of this commission goes to the liquidity providers, and less part goes to DEX platform itself. So that's the idea of DEXs, 3 parties, and you can potentially run your DEX or either become liquidity provider. So then derivatives, it's also kind of, I wouldn't say that it's new business model, but now new platforms just recently launched their projects, but mostly of them, they kind of copy and improve the business model of synthetics. And core idea of synthetics is you can buy SNX tokens, and then you can lend these tokens into the platform, and then you as a trader or user or any user can trade different trading pairs. They provide data feed on Forex, Crypto, some indices, and even some of the derivative exchanges they provide even on the shares, or let's say single stocks or equities. You can call it whatever you want. So, and the core idea here, it's a pure market making approach. So basically, when you lend your SNX tokens, at the same time, the platform issue, according to their formula, some certain amount of cents. The cents, it's a derivative on this platform. Overall, if you, if just to try to simplify the derivatives platforms, when your traders, they are making money, the value of the SNX tokens is it's complex formula, but it's kind of goes down and you lose. When the users, they are losing money, you as a SNX staker, you are making money. So this is pure market making approach, and SNX token holders, they become here liquidity providers. So you provide kind of global debt pool, which can be used for the platform to settle their outstanding for each transaction debt, or vice versa. When users are making money, you as a liquidity provider, you are losing, and vice versa. So that's why derivative exchanges, it's also there, you can, hedge your risk. You can buy SNX tokens or any other tokens from the different exchanges, from the other derivative exchanges, and potentially you can make money both ways. So you generate revenue on the platform by just staking the tokens on the platform, and at the same time, if the platform is doing well, then the value of your tokens also will be increasing through the time. So that's how potentially you can make money if you are the user. So potentially you can just trade, and this is the good thing that you don't need, for example, now if you want to deal, if you want to trade, let's say, perpetual futures, you have to go to centralized counterparty, let's say Binance or any other exchange. Here you can trade derivatives based on DeFi business model. That's the good thing about derivative exchanges. So the last business model, it's not last, but because I am running out of time, but please guys give me a couple of minutes more, okay? So insurance, I will be fast. Insurance, also it's a new business model, not new kind of, but generally it's new on DeFi. And here what you can do, you can become coverage liquidity provider. For example, you have your 100,000 USDT, you can become coverage liquidity provider, you can lend your money on the insurance platform, and the platform, you as a user, what you can do on the platform, you can come on the platform, you can choose the protocol which you wanna to cover yourself, because for example, you put on the lending, you let's say stake on the lending platform AVA 100,000 USDT. So your APY there is I don't know, 3%. But you don't want what's going to happen if somebody hack this AVA? Potentially you will end up with zero. So you will potentially you may lose everything. So this is why you want to hedge this risk. And what you do, you go to the insurance platform, DeFi insurance platform, you buy this, so you have to choose your particular protocol there, because this platform has to support this protocol as well. So you have to choose it, and then there is the rate, how much, what is the insurance policy, what for this insurance policy, because most of the time, like even yesterday I checked several insurance platforms, and 90% of them, they offer insurance only from the hack. So if somebody will hack AVA, let's say lending platform, then they will cover your loss, if you of course paid them their interest. So that's why here you can you can act as a user, and you can hedge or offset the risk on this platform from your staking on the other DeFi platforms, or either you can be coverage provider here, which means it's also kind of liquidity provider. And it's also a pretty good business model in terms of diversification your portfolio. But the only one bad thing about insurance that when time comes, or let's say something happened to this lending platform, let's say, which you chose already when you stake or when you bought their insurance, that you have to claim your kind of loss, and it's a centralized process, and the certain people will be considering or investigating your claim. So this is the bad thing. That's why I wouldn't say the insurance, it's a pretty well established business model. Still you can cover your you can generate some interest rate by being coverage provider, or you can offset the risk. But it's also there are some centralized approaches, which is already not 100% DeFi. So DeFi components, okay, this is the layers, guys. So what you have to know here, the first, it's an aggregation. What does it mean? It's just different platforms where you can search all the information in order to run your yield farming, meaning like to diversify your portfolio, like finding out where is better to lend, stake, and so on. That's why you should use this aggregation layer. It's kind of aggregation of information. It's not the aggregation of the protocols. It's aggregation of the information of the protocols. Then it's application layers. Application layers, most of the time, it's a centralized application, because even any DEX exchange, like the web interface and so on, it's kind of centralized. And there are certain people who do support these layers. So this is why you have to keep in mind, but there are still some certain like centralized layers, but you will not get affected in terms of losing money, because if you connect your MetaMask with DeFi protocol, no matter what is going to happen to these centralized layers, anyways you will get your money back because it's connected directly to the smart contract. So this is the good thing about DeFi. So then protocol layer, asset layer, and settlement layer. So one more time, guys, yield farming is the process how to find the best, how to generate the best or the higher interest rate in terms of DeFi, but at the same time it's a more specific things which we just went through, and you can use all these tips, you can use all these DeFi business models, you can diversify your portfolio, you can do different business models. For example, you can lend USDT, you can borrow Bitcoin or vice versa. Then you can go buy for the 50% of this Bitcoin, you can buy tokens which will be based on the derivatives exchanges. Then another 50% potentially you can invest into the liquidity pools. Then you can invest some of the, then you can go and buy insurance on your platform. You know, so there are a lot of opportunities, and you will not be able even to end with all these opportunities during the time of the finding all these potential ways where to invest. Okay, the last thing is asset management. It's not kind of DeFi, but there are on the market, I mean, there are so many platforms now that what they offer kind of asset management. What they are doing, basically you invest money to them or with them, and what they are doing, they are basically doing this yield farming. They are checking all the opportunities, all the interest rates, everything, and they diversify your portfolio behind you. And of course, you have to share, let's say 20% or 25% usually success fee with them. And the only one disadvantage here that most of them, they are doing this not in a transparent way, and you don't really know how they utilize your money, how, where, and when they generate the profit, how they invest there. So this is why all these asset managers be very careful. Do not lend, do not stake 100% of your portfolio. Better to go by the percentage approach. 10% here, 10% here, 20% here, 30% here. So guys, if you would like to watch more videos with me, because I have a lot of topics on our YouTube channel, so please subscribe to our YouTube channel, and also we have for our B2Broker our Telegram channel. You will find there different good tips or insights for your crypto journey. And this is why, guys, thank you very much for your attention, and I will be delighted to answer all your questions on our booth. Thank you very much, guys. Bye-bye, and good luck for all.